Welcome back to The Exchange. We are talking cyber, spending, and sales in today's earnings exchange with CrowdStrike, Affirm, and Dollar General set to report. Joining me with the trades is Gina Sanchez, Chief Market Strategist at Lido Advisors and a CNBC contributor. First up, CrowdStrike shares down more than 22% since that global outage in mid-July. Deutsche Bank flagging the concessions to customers to make up for that outage as a potential headwind for revenue for both this quarter and beyond, but also writes it expects CrowdStrike's customer churn to remain low, given the company's, quote, strong track record and deep embeddedness. So, Gina, is this the pullback you can buy?
Well, so this is a question. If you look across analysts, there's a general consensus that this is a company that you should be buying. Here's one thing that I'm going to add to that conversation, which is that the legal ramifications of what is happening or what has happened have yet to be fully understood. The company has come out and said that they have the cash to be able to withstand the legal charges that could be leveled at them. The problem is that now you're starting to see a potential shareholder legal action against the company. You obviously have Delta, and then there are unknown legal actions that we don't know yet. And this is going to take months, if not years, to play out. And what that is causing is it's causing CrowdStrike to have problems upping the renewal rate, selling people into, selling their customers into other use cases for CrowdStrike. So upselling. Even it's slowing down their ability to bring on new customers. That's a challenge that has to be watched. Okay,
we'll watch whether rivals maybe get a foothold. And CrowdStrike CEO George Kurtz is going to join Jim Cramer in an exclusive interview tomorrow on Mad Money. Don't miss that. Next up, Affirm. Shares up nearly 7% since Jay Powell cemented a September rate cut last Friday. Bank of America writing lower rates should support Affirm's revenue, likes its profitability focus, expanded partnerships. But, Gina, you're not as positive as B of A, and the stock is down 5% today. What do you say?
So this is a tough one because I do think they're making all the right steps, but it's sort of like a fish growing up in a shrinking pond for the time being, which is that they're growing their revenue, they're making the right partnerships, they have struck a deal with Apple Pay that puts them in the right direction, and they're moving towards profitability, unquestionably, and they've beat five out of the last 5 earnings. So, they're on the right track, but there is going to be a headwind to what they can do. This is a, buy now, pay later type of company in an environment where consumption is falling. So I think that if you're enthusiastic about this, you have to be prepared for a pretty slow period that could come in the first half of 2025 until rate cuts really start to take hold, because that's just the reality of being in a consumer play that requires consumption volume.
All right. Well, Affirm CEO Max Levchin also sitting down with Cramer. He joins Mad Money tonight, 6 p.m. Eastern. Last up, Dollar General shares up nearly 4% since that disappointing July jobs report. But Wells flagging a weakening consumer as a headwind and warns that competition from Walmart and changes to the Department of Labor's overtime rule are going to prove tougher for Dollar General than competitors. But, Gina, you see opportunities ahead?
Yeah, so this is actually one we own. We like Dollar General. And look, when the market gets tough, when consumers start to pull back, they go cheap. And Dollar General has actually changed their strategy to back to basics, and that's stuff that people will buy. They are seeing more foot traffic. They are seeing less dollars per head being sold, but they're continuing to see foot traffic, and expectations for earnings next year is a 9% growth. That's pretty healthy.
All right. Gina Sanchez, thank you. Lido Advisors Chief Market Strategist.